Under pressure with our SPY trade, it's going down today. We gotta keep an eye under pressure. So right now, the SPY, the S&P 500 ETF Trust, it's battling. It is a battle. Hey, it's like hit the record button. You brought me some good luck here. Hit the record button at the right time. Got a little green action going on after a lot of downtown to Chinatown on the trade. I was hoping, and my fingers crossed, we would find that support down there and not let it breach the 398 flat threshold. It's trying to do that because when we watch this trade in real time, if we go back over to the Robinhood, here's the trade that's under pressure. It's that SPY put credit spread. We got 5 contracts right there, and it's 397 is that number that we have to stay above, or we're going to be taking big time gas. And what I mean by that potential is, we booked $45. That's it. We just booked $45 in premium on the trade. So that $45 is in our pocket. But what's still on the table is the difference between these two. Okay. So the 395, that is the put that we bought as downside protection. So we limit the amount of risk we have between these two strikes. Okay. And it's $2 wide times 100, right? Per contract. So it represents 100 shares. So $2 wide times 100 is 200. But then we have 5 contracts. So that's $1,000 worth of risk on the table right now. So this thing could go ugly fast. And that's why you see these numbers. They're basically changing right before our very eyes. So if I tried to get out of this trade right now, it would cost me $80. So $80 against our 45, we would be, $35 in the hole, but it must be going green again because this number's going down. Come on, keep it going green. Oh, I don't want to have to get out of it at a loss for sure, but I don't want to take big gas on it either. And the third caveat is I don't want to watch it the rest of the day. There's other things I want to do. But it is kind of exciting. It is interesting. It did fight back a bit, as you can see through here. It was really making me nervous, getting real low. How low can you go? And then we've had some green action back. That is the support. It's trying to fight for support, but it's been battling and creating new lows, new session lows for the last at least hour or so. So we got to keep an eye on that. That's tried to be a nice size candle right there in the green. So it's at 398.52. Let's see what it would cost me to get out. It cost me $60 right now, so I'd only lose 15. We'll keep a close eye on that and probably get back to it before this video ends. But I wanted to go over to my friend Citigroup. The C, I've been missing you. I ain't missing you at all. I am missing you. Hey, don't go up on me. I was getting ready to get in on some of the action on Citigroup. We like Citigroup. I think I had like 1,000 shares of Citigroup, and I got in at a great number. Oh, when was that? It was maybe September or October of last year. I got in at like $44.09, and then when I got into the options, which would have been late November, I did a couple different moves with Citi, was collecting premium on both puts and calls, and then I ended up having my shares called away at like, I think it was like 47.50. So you can see the action I've missed in the meantime. This spread between the 47.50 that I put in my pocket and the 50.95 that's currently at. But I did make that profit between the 44.05 I paid and the 47.50 that those shares were taken away from me. I want them back. So we're going to just look at a little put action on Citigroup just to see, like, if we go 10 days. Now let's go 10 days out, which will be next Friday. And if we look at selling some puts on the Citigroup, if we look at that, and we're going to be a little more aggressive than we normally would, just because we don't mind owning it. It's still a great stock at $50. It has a sweet premium, for if you look at just the eyeball test of this premium, that's an over 1% return in 10 days. Because it's 52 cents on $50, right? So that's over 1%. In fact, I'll show you on the old abacus. We got 52, and then we divide that by 50. That is just over 1%. Okay, so just over 1%. And of course, just as I get out of here, Citi starts going up. Hold on, Citi. Let's see what our other friends say. So they do pay a decent dividend. There we got a just under 4% dividend yield. It's down today, but it's just recently you see a little uptick there since we've been talking about it. But it is down today, which makes the put premiums have a little bit more just that premium in them. So if we look over on our friends at Alpha Spread, we see that they feel that Citi is 37% undervalued and have them at an $80 value on the intrinsic, and on the dollar cost average. I'm losing my train of thought. I'm still thinking of that SPY trade. It's only a few dollars. You never know. It could be $1,000. They have them here at 101, and on the relative, they have them on 60, with the intrinsic on a base case scenario at 80. Worst case, they have them at 51.82, which is still right around where they're at now. And then best case, they have them at 166. That sounds like way too far-fetched for me, but base case, I wouldn't mind taking a look at that. Where'd that internet go? There it is. So let's go back here, see what Citi is trying to do. And if we look out, expiring March 17th, sell put. Okay, so basically we're signing up for the obligation to buy at $50 if indeed the share price sinks through the $50. And that could easily happen because we might have a couple more red days in store for us here. But sometimes, like today, financials might be overreacting. So a little bit of a sell-off in the financial sector today. But if we look at this, booking this $51, if we put 3 on it, if we signed up for 300 shares, can we get 52? Can we get $52 per? Maybe, maybe not. Probably not, because the share price is currently going up. Let's just go for that 51. It's a very tight bid and ask, which is nice. Cash secured put. And there we have this. Let's see if that gets filled. It does. It gets filled. There's $153 on a $50 strike price on Citigroup, which we like. We do like the Citigroup. So I'm going to check back, though, in just a minute. Keep an eye on the SPY between you and I, and then determine what we're going to do in that trade. But there's our 300 shares on the table in this cash secured put for Citigroup. Collected $153, and it is $15,000 collateral. But again, that is not the risk. The risk would be, or that would be the risk only if Citigroup goes to zero between now and us taking possession of those shares, and that isn't going to happen. So basically what it is it puts that money aside in case those shares are assigned to me, and then it takes my collateral and it pays for them, and then we start selling cash or start selling covered calls and collecting dividends. So I'll be right back to take could be the final look at that SPY put credit spread today to determine if we're getting out or if we're going to let it ride, because there's less than 2 hours to go, less than 2 hours in the trading day. So I'll be right back. See you then.